Hello, I'm Andrew.
And I'm Charlotte. In this video, we're going to talk about all the ways you can think about asset classes.
As you may have heard in other videos, asset classes are groupings of investments with similar characteristics. Stocks or equities, bonds, and cash are considered traditional asset classes.
When you're building your investment portfolio, there are areas within each asset class that you want to consider, because not all stocks and bonds are the same. There are many ways to differentiate between stocks and bonds based on the characteristics of a company or a security.
We call any characteristic that affects how a security behaves in the market a factor.
Just like diversifying your investment portfolio across several asset classes can help reduce risk in your portfolio, diversifying among many securities within each asset class can also help reduce risk.
By keeping an eye on your portfolio's exposures to various factors, you can avoid concentration in any one part of the market. That way, you don't have all your eggs in one basket.
There are lots of ways to break down asset classes into smaller groupings. One common approach is to group stocks and bonds by region around the world. Even securities from neighboring countries can behave differently from one another for a variety of reasons.
The currency a stock or bond is issued in is also an area to consider, since foreign exchange rates can affect security prices and investment returns.
Think about a scenario when Canadian US stock markets are declining. Investors may want to allocate portions of their portfolio to other markets like Europe or Asia if they expect those markets to perform better.
There are many other ways besides regions and currencies that securities within an asset class are differentiated. Consider how companies in the same industry or in different sectors of the economy can behave similarly to one another because similar factors affect their business.
For example, stocks in the clothing industry tend to behave similarly because when consumer preferences and spending habits change, many clothing companies are affected, not just one or two.
These ways to break down asset classes by region, country, currency, industry, and the sector are similar for all asset classes.
There are some ways to drill down into asset classes that are unique to an asset class.
For bond investments, common breakdowns include grouping bonds by the credit quality assigned to them by rating agencies. Another common grouping for bonds is duration, a measure of how sensitive bonds are to changes in interest rates.
These groupings all exist because securities that have similar attributes can behave similarly.
For stocks, the industry or sector a company operates in is one factor, but there are so many more factors that can affect stocks. Some factors investors consider include how quickly a company is growing, how expensive the stock is relative to a perceived value, and the size of the company.
These other factors that can be used to group stocks are often referred to as style factors. Some common style factors you might hear about and that Andrew just described are growth, value, and company size.
These style factors can all outperform or lag behind broader stock markets at different times for a variety of reasons. For example, investors may avoid smaller companies in favor of large ones when economic growth is weak, since larger companies tend to be more resilient.
There are more than just those three style factors. Momentum, quality, volatility, and dividend yield are style factors too.
Investors think about all these style factors because over long time periods, some of these factors have outperformed broader markets.
Being aware of all the factor exposures in an investment portfolio is important if you want to diversify your portfolio to avoid concentration in any area of the market. Diversification is not limited to more obvious areas of concentration like investing in one security or asset class. It can be a little more complex, like identifying concentrations in various regions, countries, currencies, industries, credit qualities, durations, or style factors.
Thanks for joining us today. Make sure to continue following along with our videos to learn more about investing, and have a great day.